This is Robert Kraft, and I'm coming to you live on SNNLive, and we're at the Sidoti & Company 2016 Emerging Growth Conference in New York City. With me right now is Tom Tomlinson from Alliance HealthCare Services. It's a publicly traded company with the symbol AIQ. Tom, welcome back to SNNLive.
Thank you. Great to see you again.
It's great to see you too. So for those who may have missed our first interview that we did via Skype, let's start off with an overview of the company, and then we'll go from there.
Sounds great. You know, the way to think about Alliance is that we're an outsourced services provider to hospitals. In fact, 77% of our revenue is derived from hospital-based relationships. We think that's really critical strategically because it's very clear in healthcare in the United States, more and more care is delivered by hospitals and hospital-affiliated providers of care.
So since our last interview, which I believe was in August of this year, what's been going on in the company?
Well, as you may recall, one of the significant changes that happened in our company was in March of this year, where we had a new majority shareholder take 51% of the shares of the company. That new shareholder is a large China-based company with significant resources, in fact, about $13 billion worth of asset value in the investment company that became the majority shareholder of Alliance. And so we're now a little over 2 quarters past that transaction date. One of the things we're working on with our new majority shareholder is outlining a strategy for how we enter the healthcare services space in the country of China, which is a very large market. And what we've articulated there is really an initial focus on management services with limited capital investment until we can demonstrate we can profitably operate facilities in the country of China, and then looking at bigger investments down the road. But having a large, successful company in China as our partner as we explore those opportunities is really significant for us.
And what's their background? I mean, do they have experience in investing in companies like Alliance?
So healthcare is a newer investment area for them. Their background was about 20 years ago starting a property development company, which is now one of the largest property developers in the U.S. But in the last year or two, they've started to outline a very large healthcare strategy. In fact, one of their other healthcare-related transactions that they have announced is a $1.4 billion acquisition of an insurance company based in Hong Kong, so that they can offer a health insurance product into mainland China, along with the kinds of healthcare services that Alliance provides.
And, China, I believe it's socialized medicine. I mean, does that come into play when you're outlining your strategy as to how to enter that market?
Certainly it has a big impact because there are many things about their healthcare environment that are different than the United States. One of the things that is important to note, though, is there's been change in the last couple of years in China. The government now has outlined new policies that actually are promoting private investment in the healthcare delivery sector. So the government is actually supporting the idea of private industry coming into healthcare in order to expand access to and quality of care to their population. And so they're actually encouraging the kind of investments that Taihat and Alliance is making in delivering services in the country.
And I also wanted to address potentially a fear. I mean, you come in, you kind of you let them in on how you provide your services, and then potentially a competitor just comes in and copies it. I mean, is that a fear itself?
Well, there's always going to be competition in any market. There certainly is in our U.S. business. We think we compete pretty well. I would tell you specifically as it relates to our new majority shareholder, one of the things the independent board members of our company did is they negotiated a very extensive standstill agreement with Taihat as a majority shareholder, and part of that standstill agreement includes very specific non-compete language that requires anything that we do together in our space, anything that Taihat does, in the healthcare space, in radiology, oncology, and interventional services, which is what we do, must be done through the Alliance platform and therefore benefit all shareholders of Alliance, not just Taihat as the majority shareholder.
Okay, so bringing it back to the U.S., there's been some interesting developments when it comes to Obamacare. How does that affect Alliance?
It's a great question, and one that I've gotten often in recent weeks in particular. The reality is our strategy is not dependent on the Affordable Care Act. We've been in this business for 30 years. From the very beginning, our approach to healthcare is to partner with hospitals in the United States to provide opportunity for those hospitals to provide better access to care to the patients in their area and better quality of care. There's been a trend that's been going on for over 15 years in the healthcare space in the U.S., and that is that more and more care is delivered by hospitals and hospital-affiliated networks of care providers. That trend will continue. It predated what we call Obamacare, the Affordable Care Act. It'll continue after whatever happens with changes that may occur with the Affordable Care Act. So we actually think that this underlying trend in healthcare is hugely beneficial to Alliance Healthcare, irrespective of what changes might occur with the Affordable Care Act.
So Tom, just like I asked you in August, and again, from what you can tell me, what are some of the goals and milestones for the company for the rest of 2016 going into the first quarter of 2017?
Sure. Our earnings release comes up this Thursday, so have to be a little careful in what we say. I would just remind people some comments we made at the end of our last earnings call. And that is that we're very confident that a price challenge we've faced in our business over the last couple of years, as we get to the end of this year, will be largely behind us. And so one of the things we mentioned on our last earnings call is that we're looking here in the back half of this current year for there to be some acceleration in our year-over-year earnings or EBITDA performance, in addition to the strong revenue growth we've now been delivering for the last 6 quarters.
Tom, where can our audience go and find more information about the company?
Sounds good. Well, our website is www.aiq-us.com, or just Google Alliance Healthcare Services.
My name is Robert Kraft, and I'm coming to you live on SNNLive, and we're at the Sidoti & Company 2016 Emerging Growth Conference in New York City. With me again has been Tom Tomlinson from Alliance Healthcare Services, publicly traded company with the symbol AIQ. Tom, always a pleasure. Thank you.
Likewise. Thank you.